Hello, and thank you for joining us at XM.com. This is the Daily Market Comment by Rafi Boyadjian. I'm Cristina Marujos. Risk sentiment took a knock on Tuesday as it emerged that the Speaker of the U.S. House of Representatives, Nancy Pelosi, is on her way to Taiwan, defying China's strong advice against visiting the disputed territory, sparking threats of retaliation by Chinese officials. Fears of a reprisal from Beijing have upset the market calm. Only on Friday, the VIX Volatility Index had fallen to its lowest in 3 months, but the index has jumped higher today and U.S. stock futures are declining. Earnings results from AMD, PayPal, Starbucks, and Caterpillar may bring some positive excitement later on for U.S. traders, but the mood overall is somber. It's quite likely that markets are overreacting to Pelosi's visit to Taiwan, but the fact that the timing coincides with renewed jitters about a recession following yesterday's downbeat PMI indicators globally, investors are nervous about even the slightest possibility of China retaliating with fresh trade restrictions on U.S. imports. The heightened geopolitical risks bolstered bonds, fueling a 1.5-month rally that started when expectations around aggressive central bank tightening began to recede. The 10-year U.S. Treasury yield is extending its slum today, hitting a more than 3-month low. The yen also drew safe haven demand, rising against all its major peers and pushing the US dollar below the 131 level. The Greenback has been struggling from pared back expectations for Fed tightening amid signs that the US economy is cooling, and Powell hinting at a slower pace of rate increases down the line. It remains to be seen whether Fed speakers coming up later today will be able to add more momentum behind the dollar's attempt to halt its descent. Sterling is on the back foot today, testing the $122 level, but growing expectations that the Bank of England will deliver a double hike on Thursday should keep the currency supported. The same cannot be said for the Aussie, which nosedived 1.5% after the Reserve Bank of Australia cast doubt about further big rate increases, even as it lifted the cash rate by 50 basis points on Tuesday as expected. Like the Fed, the RBA refrained from giving guidance on the size of future rate hikes, citing the uncertainty around the outlook, with investors interpreting this as a dovish shift. Thank you for watching today's Daily Market Comment here at XM.com.